What if money didn't need a bank, a government, or permission to move? That's exactly what cryptocurrency is, and in this explanation, I'll explain it simply. If crypto feels confusing, technical, or intimidating, this explanation is for you. No jargon, no hype, just the basics. Cryptocurrency is digital money that exists on the internet. It isn't printed like cash, and it isn't stored at a bank. Instead, it lives on something called a blockchain. Think of a blockchain like a public spreadsheet that anyone can see, but no one can secretly change. Traditional money is controlled by governments and banks. They decide how much exists and when it can be moved. Cryptocurrency, though, is different. It runs in computer networks instead of banks. You can send it directly to another person anywhere in the world without asking permission. The blockchain keeps track of every transaction, and transactions are grouped into blocks. Those blocks are linked together in order, forming a chain. Once a transaction is added, it cannot be changed or erased. This is why crypto is considered transparent and secure. Bitcoin was the first cryptocurrency created in 2009. It was designed as an alternative to traditional money. Only 21 million Bitcoin will ever exist. Because of this limited supply, many people compare Bitcoin to digital gold. Bitcoin is not the only cryptocurrency. Ethereum allows smart contracts, which are programs that run automatically. And other cryptocurrencies focus on fast payments, privacy, or powering apps and games. People use cryptocurrency in several ways: to send money internationally, to invest or trade, to pay for goods and services, to use decentralized apps, and to protect value from inflation. The technology behind crypto is very secure, but mistakes can happen. If you lose your password, no bank can recover it. Scams exist, and prices can move quickly. That's why learning and education before investing is important. Cryptocurrency isn't just about making money, it's about control, transparency, and financial freedom. It allows people to use money systems without needing a bank. This was a simple explanation of what cryptocurrency is. Okay, what gives cryptocurrency value? This is one of the most common questions people ask about it, and it's also one of the most misunderstood. People often say things like crypto isn't backed by anything, or it's just numbers on a screen, or even how can something digital be worth real money? To understand what gives crypto value, we first need to understand what gives anything value in the first place. Money, gold, stocks, and even collectibles all have value for different reasons, though crypto is no different. And value comes from trust, usefulness, scarcity, and belief. Let's break this down simply. First, value comes from agreement. Money only works because people agree it has value. A dollar bill is just paper. It has no practical use by itself. You can't eat it, build with it, or power anything with it. What makes it valuable is the shared belief that other people will accept it in exchange for goods and services. The same principle applies to cryptocurrency. Crypto has value because millions of people agree it does. That agreement didn't appear overnight. It developed over time as people started using crypto, trading it, and building systems around it. Second, value comes from scarcity. Scarcity is one of the strongest drivers of value. Gold is value because it's rare and difficult to mine. Real estate is valuable because land is limited. Art is valuable because it's unique. Many cryptocurrencies are valuable because their supply is limited. Bitcoin is the best example. Only 21 million Bitcoin will ever exist. This limit is built into its code and cannot be changed without the agreement of the entire network. No government or company can print more Bitcoin. This scarcity makes Bitcoin fundamentally different from traditional money, which can be printed in unlimited amounts. When more dollars are created, each dollar becomes slightly less valuable. This is called inflation. Bitcoin's fixed supply is one reason people see it as a store of value. Third, value comes from utility. Something becomes valuable when it solves a real problem. Cryptocurrency solves real problems at the same time. and several of them. It allows people to send money instantly across borders without banks. It allows individuals to store wealth without relying on financial institutions. It allows people in countries with unstable currencies to protect their savings. It allows transactions to happen 24 hours a day, 7 days a week, without intermediaries. Some cryptocurrencies go even further. Ethereum allows smart contracts, which are programs that automatically execute when conditions are met. This enables decentralized finance, digital ownership, and applications that don't rely on a central authority. When a cryptocurrency has a real-world use, demand increases. Demand is a major factor in value. Fourth, value comes from security. People value systems they can trust. Cryptocurrencies are secured by cryptography and decentralized networks, not bound to any single government. Instead of one company or government controlling the system, thousands of computers around the world verify transactions. This makes it extremely difficult to alter records, fake transactions, or shut the system down. Bitcoin has been running continuously for over a decade without being hacked at the protocol level. That reliability builds trust, and trust builds value. Fifth, value comes from decentralization. Traditional financial systems rely on central authorities. Banks can freeze accounts. Governments can restrict access. Payment processors can block transactions. Cryptocurrency removes much of this control. No single entity owns the blockchain. No single person can decide who's allowed to use it. For many people, especially those who have experienced financial censorship or instability, this freedom is incredibly valuable. The more people who value decentralization, the more value crypto gains. Sixth, value comes from network effects. A network becomes more valuable as more people use it. The internet is valuable because billions of people use it. Social media platforms are valuable because everyone is connected to them. Cryptocurrencies work the same way. As more people buy, hold, use, and build on a cryptocurrency, it becomes more useful. Businesses begin accepting it. Developers build tools and applications around it. Investors gain confidence. This creates a feedback loop where increased adoption leads to increased value. Bitcoin and Ethereum benefit heavily from this effect. Seventh, value comes from transparency. Most traditional financial systems are opaque. You can't see how money is being moved behind the scenes. You can't verify supply in real time. You have to trust institutions to tell the truth. Though blockchains are transparent by design, anyone can see transactions, anyone can verify the supply, and anyone can audit the system. This transparency reduces the need for blind trust and increases confidence in how it works. Confidence increases the value. Now, eighth, value comes from durability. So, value itself also comes from durability because for something to hold value, it must last. Bitcoin transactions from years ago can still be verified today. The blockchain doesn't degrade over time. As long as the network exists, the records exist on this network. This durability is similar to how people trust gold because it doesn't corrode or disappear. Digital durability is a powerful concept, especially in a world that increases living online. Ninth, value comes from belief in the future. With cryptocurrency, a large part of the value is forward-looking. People believe it will play a bigger role in the global financial system. They believe it will be used more widely. They believe it will power new applications, services, and economies. This belief drives investment and development. Just like early investors believed in the internet before it became mainstream, many people believe crypto is still in its early stages. That belief adds value today. 10th, value comes from optionality. Cryptocurrency gives people options. You can hold it as an investment, or use it as money, or move it across borders, or over-border payment systems. You can store it outside the banking system. You can participate in decentralized applications and many other uses. And having multiple use cases increases the value, obviously. So assets that can only do one thing are less flexible. Crypto's versatility makes it more valuable to a wider range of people. Now let's address a common concern. People often say, crypto isn't backed by anything. But this raises an important question. What is traditional money backed by? In the past, currencies were backed by gold. Today, most money is backed by trust in governments and central banks. There's no physical asset backing modern money. It works because people believe it will continue to work. Crypto is backed by math, code, networks, and global consensus. It's backed by users, miners, validators, developers, and infrastructure. It's backed by utility and demand. Backing doesn't have to be physical to be real. Another criticism is the volatility. Crypto prices, yes, they move a lot. This doesn't mean crypto has no value. It means the market is still discovering what the value is. New technologies often experience volatility as adoption grows, and over time, as markets mature, volatility tends to decrease. We've seen this pattern with emerging assets. Finally, the overall value comes from choice. People choose the crypto. They choose to hold it, build with it, and accept it. That choice, repeated millions of times across the world, is what gives this cryptocurrency its value. It is valuable because people believe in it, use it, protect it, and build around it. It has value, again, to solve problems and offer freedom and provide all these wonderful alternatives. And it has value, finally, because it exists in a world that increasingly needs the digital, global, and decentralized systems. Whether crypto succeeds or fails in the long run is still being written. But its value today is very real, and it comes from the same place all value comes from: human agreement, usefulness, scarcity, and belief. In future videos, we'll explore specific cryptocurrencies, how their value differs, and how people evaluate which projects may succeed. We may cover how to buy crypto safely, what wallets are, how to avoid scams, and how people actually make money with crypto. And if this helped you, please like the video, subscribe to learn more, and comment what you want explained next if that is your choice. Thank you for listening and viewing. Hello there. It's wonderful to connect with you today. I truly value these special moments we share together. Just taking a moment to appreciate this quiet time, it allows us to breathe and find some peace. Sometimes a little pause is all we need. Such simple acts can bring great clarity and deep calm. Thank you so much for joining me right here today. Your presence is greatly appreciated in this tranquil setting.